is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
I've listened to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Love coming out of you makes you happy. The whole world can love you, but that is not what will make you happy. What will make you happy is to share all the love you have inside of you. That is the love that will make the difference. Market-wise, let's take a look at it out here. We have the Dow Industrials down 14, NASDAQ off 6, S&P's down 3, gold contract flat at $11.33 an ounce, silver down a penny at $16.01 an ounce, platinum down $5 at $9.17 an ounce. You got copper off a penny at $2.49 a pound. Light sweet crude down 72 cents, trading at $52.58 a barrel. Notes, 10-year note up 7 ticks, 123.11. 30-year bond up 21 ticks, 149.02. Both the notes and the bonds continue to try to get off these lows. King dollar down 298 ticks, traded at 102.990. What you had with King dollar is this. King dollar tested its high yesterday, had light volume, didn't hold price. Bottom line, back down today. Guess what? Dramatically lighter volume. We are on holiday trade, no doubt, in a big way, folks. But the bottom line is that that is saying that King dollar does not necessarily have to do a correction right at this particular point. Euro. The euro is at $1.04, and the yen is trading at 117.50. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, what do you have? Okay, so we got a flat market out here. The cash market is laying out here at 22.68. Your high in the cash is 22.77. Bottom line, sideways move. When you talk about anemic volume, the holidays have started early, folks. We're only at 399 million shares right now in the NYSE, and we take a look at the NASDAQ composite. The composite, you're at 1 billion. Bottom line, so light volume right across all the indices. We go over to the Dow Industrials. The Dow Industrials has been trying to tag the 20,000 level. Got close yesterday, got close today. Yeah, yesterday you got to 19,987. Today you got to 19,986. Bottom line, I expect before this new year, it will tag it. When you get that year within 13 points, it's not going to take much to tag it. What you had out here today, Nike came out with numbers. Nike was up 1.5 points, but that was for about a slight second at the open. And so inside the Dow stocks, there wasn't a lot of help in order to get it there. You had Merck bringing the Dow down. You had Pfizer bringing it down. Boeing was trying to get it up, but not enough in order to get it up to that price point. NASDAQ composite. What do we have with the composite? The composite has continued to fail on price and volume. Sideways move out here today. Bottom line, we've been in the same place right now since the 13th of December inside the composite. Inside the NDX 100, that is set up the exact same way. Sideways move, 49.52. Bottom line, it's not saying much. We take a look at if you want to see the anemic volume out here, the SPYs, folks, have done 42 million shares. Bottom line, that's in comparison to 142 million. The Qs out here, you're dealing with the Qs are a trip. The NDX 100, folks, the Qs have a problem. We've done 5 million shares here. I mean, I can make the case it was trying to get into the highs of yesterday. The high of yesterday was 120.77. High today, 120.68. 8. Really, you get a sideways move. That's what it really comes down to. That being said, what we do have inside that sideways move in the last 5 days, on the 16th, you had action on the way down. That's the bottom line. It couldn't get up into higher price, and I don't expect we're going to get into higher price inside the NDX 100 nor the NASDAQ Composite. Gold contract. What do we have with gold? Gold contract out here. Sideways move also. The low out here today was 1131. The high is 1138. You did 106 million contracts. Now, what we had out here yesterday and today, you're backing into the December 15th area where you had huge contract volume. We did 282,000 contracts, and we hit a low of 1124. Yesterday what you ended up doing, a rejected lower price. We did 146,000 contracts. Today you did 106. So in that context, that is a good test of lows. Now what the gold contract needs is a sign of strength, meaning that you have buyers. It's showing that the sellers are gone, but guess what? You need buyers to get the higher price. We're going to take a look at the silver contract. So silver out here is trading at a price point of $16.02. Silver also come down yesterday, rejected lower price, had lighter volume. What we had is that the low in silver on the 15th of December was $15.92. We had done 106,000 contracts. Yesterday, you got down to a low of $15.67. You did 58,000 contracts, and you rejected lower price. Now, today what we've done is this. You got a little higher than yesterday. You did 43,000 contracts, and you're basically laying at the 1602. What I would have loved to see is that it would be laying at 1616 versus 1602. You can make the case that, yeah, you get a small expansion of volume on the way up, but bottom line, there's no follow-through in that whole metal area right now. Notes. We got the 10-year note. What do you have with the notes? Notes out here, TY7. Okay. So the notes, we've done 454,000 contracts today, which is light. It's holding price, which, in itself is good. Bottom line, the 10-year has to get back inside the 123.30, and right now you're at 123.11. The 30-year did have some good price movement out here today. The 30-year came back down to the 148.04. It rejected lower price once again, finished near the top of its range. 30-year, looks like the sellers are gone. We just need buyers now. Kind of like better looking than the gold contract, that's for sure. King Dollar. What do we have with King Dollar? Okay, so King Dollar, this is how it's shaking out. What we had out here yesterday, King Dollar got over the high of last week, over the high of December 15th. We did it yesterday with 29,000 contracts versus 80. We're pulling back today, but not enough volume, only 20,000, so that's not saying anything. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow Industrials right now down 16. You get the Nasdaq off 6. S&Ps are off 3.5. If we go over to Federal Express came out with numbers last night, folks. So FedEx is down $5.90. You know, not a huge downdraft for a stock that's $192. What you have, however, is this. You know, FedEx made a high out there at $201. You're coming off that high now. The volume today is a monster. So what's pretty cool about holiday trading is this, is that, and in this particular holiday trading, what is unusual is that the way that Christmas, Hanukkah, and New Year's are following on a Sunday, the market is closed Monday, but what has happened is that realistically, you know, we're only on, what's today, Wednesday, right? Yeah, it's Wednesday, and this is holiday trading in a huge way. So people have just taken off, period. They're closing shop, lock, stock, and barrel. So when that happens, it's, number one, unusual that you can get big volume. When you get big volume, whether it's up or down, that's telling you quite a bit. And in FedEx's case, it's telling us a huge amount. And why, as I walk you through this. So when you come off a high with volume, it's a problem, because what I've found is that when you come off a high with volume, your corrections are always much larger than a normal correction. So FedEx today is down 5.3 million shares. That's after making a high with 2.2. That's the first part. Second part gets a lot bigger, and what it is this, is that when we were doing this last night, when you put this on a monthly basis, what FedEx had done is that FedEx broke out, and it broke out last month. It broke out in November, as many other stocks did. It broke topside with 32 million shares. Well, the swing point it was taken out at $183 was 48 million. So you can see the correlation, 32 to 48. That's a big percentage number that's less than the takeout. So what does that mean? Well, it means two different things. When you get above a huge consolidation on price and you break out, bottom line, yeah, you know, if you break out with price and volume, guess what? The probability is much higher. You're just going to keep going. When you break out with just price, you can absolutely keep going, but most times you don't. And when you don't, what ends up happening is this, is that FedEx in this case got to $201. Right now it's already $9 off of that. Two different things end up happening. When you come off that and you start getting back inside the breakout area, the volume expands dramatically. And that's what I expect we're going to have with FedEx as next couple weeks down to 183. Now, and if that's what you get, you're going to see FedEx get all the way down because FedEx has a high volume low at 119. So it's a big number. Now, that's FedEx. Watch, this is going to get more intriguing. And so FedEx's announcement when they come out with the numbers was this, is that they said that they have to put so much money into their ground services that they spent more money than they had planned on spending. So that's why their numbers didn't come out just where the market thought they was coming out. Well, that being said, I suspect what the market's also looking at is this, is that what FedEx had is that they were running margins of approximately 12.5% to 13%. Well, their margins went down to 10%. I suspect what the market's looking at is that, guess what? Amazon is commoditizing the package delivery business. You know, they still, UPS and Amazon, and FedEx deliver, and the U.S. Post Office, they deliver millions of packages for each other and for Amazon and these other retailers. But that business itself is getting commoditized, and that's a huge problem for these packers. If we take a look at UPS is much closer to having a breakdown. Now, this is how UPS shakes out. UPS broke out with 62 million shares versus 92 million. The breakout number is $114.40. We're at 116.38. So I expect what you're going to see is more than likely it's going to be UPS that very well could come back inside its breakout area before FedEx does. Bottom line, they both look like they want to go south. When you do look at the UPS is not coming out with their numbers until January 31st. But more than likely, what we will see after the holidays is that we'll see some guidance with some numbers out there. Nike, we go take a look at Nike. Nike came out with their numbers last night. Nike's trading flat at $52.23. What we had with Nike is this. Nike made their numbers. Bottom line, really doesn't matter. There's a seller in Nike, and when this seller, you're going to see it. They opened it right where the seller was this morning. When this thing has broken down, so Nike broke down off of $67. You're at 52. Big seller is laying at $52.50 and you can see it each and every time with this volume. We get a high volume low of 51.47. You get another one the last time that it broke down in September. It broke down from 55 to 52. And if you want to see how a specialist just took many folks to the cleaners on the open this morning, Nike has it. Nike opened, so the open was $52.90. The first big trade, however, was 53, and that was at a split second, not even a 5/100ths of a second at 9:30. So it was the opening, and they opened it and sold 428,000 shares to someone. Okay, it wouldn't be just one person. And then guess what? From that point on, folks, they just sold it right off. When you look at this chart, it's actually a mind blower. You know, now what that's also saying is this: the specialist in the NYSE supposed to be getting paid for the aspect of they make a market and they know where the buys and sells are, at least the ones that are coming in pre-market, and they're supposed to make an orderly market that an equity doesn't supposed to open $3 and then sell down ASAP. In fact, only have one print. And in the Nike case, that's exactly what you got. You got one print at that higher price, and then you can see this in the chart too. It's pretty sick. And then the next print. So this print here, you can see the print 53.35, right? And then your next print is 52.28. It's like, oh really? Yeah. Bottom line, they took people to the cleaners, and they took them to the cleaners pretty quick. Some of the higher volumes, well, here, let's go. Yeah, some of the higher volume stocks out here, and there's no doubt in this low volume market. You have Bank of America down 6 cents. Frontier Communications off 15. You got Twitter down 80. GE's down 13. Apple, this is going to be intriguing to see where Apple shakes out. Man, Apple looks sick. Apple's trading sideways today, 19 million shares. It's into where it gapped down from in October. Apple on October 25th was at 118. October 26th, it was at 113. 66 million shares versus 19 million right now. No, there's no buyers in Apple. That's the bottom line. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down 14. Nasdaq's off 7. S&P's are down 3.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We go over to take a look at the commodity market. For all you folks up in the Northeast and out in the Midwest, I don't think it's as cold as it has been the last few days, but evidently the way the gas market is looking right now, evidently it's going to get pretty cold. Natural gas is up 8.9%, trading at $3.59. You get lean hogs up 1%, cotton's up 1%. That's on the green. In the red out here, what you have is that you have crude oil's down 1.4%. You get wheat off 9 cents. We get sugar down 2 cents. Let's go look at that gas market right now. So the gas numbers also come out tomorrow. And wow, this is a move. So let's take a look at this. So it's up 29 cents, which is absolutely huge. That's $2,900 per contract. You have the volume behind the move. Yeah, you got it all. Bottom line is that this thing wants to get right back up into these highs of 374, and you might have an ABC structure on the way up, because what you had here is that you had the run from November 9th. November 9th, gas is at 276. It does a 100% move of a move. Runs right up to 374. Backs down, and the volume was pretty good, light on the way down, and you're going topside once again. So let's go take a look at the oil market now. Oil couldn't hold price out here today. What you had, the oil numbers, the oil market, they were expecting a drawdown, and bottom line is they got a build. GCLF7. So inside oil out here, all right, 1 second. Sorry about that. I got to get the right contract here, folks. I believe oil. There she is. Okay, CLG7. Yeah, we're in February. So oil was down 77 cents. You're back inside the lower range, which is 53.26. Yeah. Oil looks like it wants to make its way down to $50.80. $50.80 inside the oil market was the high of the day that OPEC was meeting. And what we had out here, intraday out here, your first leg down, which was at the 10:30 mark, and that's when oil came out, got it down to 52.93. And, the bottom line, what was hanging out there was a high volume low from the 19th. Now, it took that high volume low apart. So the way this is set up now, let's see, 52.57. That's another buck. That's 51.57. Yeah, your next stop is 51.57 on this baby. And as I said, it looks to me that the normal place that it could retrace to, and we'll find out whether it's just normal retracement, is OPEC Day. OPEC Day is $50.80. Now, if you come down there and you see volume expanding, different ball game. Let's go to the XLE. We'll take a look at some of these oil and gas stocks. Sideways move. XLE is trading at 76.09. That's not telling us much. If we go over to the banking sector, the XLF. XLF out here also is just a sideways move, no volume, all of the above. And interest rate structure right now. The interest rates and the currencies, folks, are what basically I suspect are going to move this market, and we'll see. I don't see a huge amount of movement in the next few days, I can tell you that. Now, next week, right before the, I'd say at the end of the week, we could have some movement before the end of the week, because what you will get there is a little shifting around of portfolios. That being, so let's take a look at the rate structure right now. So the 10-year right now is at 2.538. The high for the year, we're right next to it, is 2.597. The thing that's amazing is that in the last 3 months, this went from 1.556 to 2.597. That is a large move. We take a look at this for the year. Just so we go over the year structure, this is what you have. The low for the year thus far is 1.3, and we're at 2.5. Big numbers. Now, that's in the 10-year. On the 30-year, what you have, the low for the year was 2%. Now we're at 3.1. You can see that's 50% move, right? This gets interesting. If we go to the 5-year, what you're going to see is that the low for the 5-year was 0.9%. And right now we're at 2%. And now we'll go even closer with the 2-year. And the 2-year, this is pretty intense in the 2-year what you have happen here. So check this out. We went from 0.5% to 1.27%. So that, no doubt, is a big number on the 2-year. And you can see as you get closer more in, meaning time-wise, that is when you have the aspect of a faster acceleration of the interest rate structure. You had the Mnuchin, who's going to be the Treasury Secretary, come out, had a interview yesterday, and bottom line is that I suspect what we're going to end up seeing with the new Treasury Secretary is more than likely we're going to see 50 and 100-year bonds, because they were floating that out there yesterday. They went from the float out to talking to PIMCO, not PIMCO, it used to be PIMCO, Bill Gross. They talked to Bill Gross about it, and his response, you can picture, well, he's in the business anyway, but his response was that, well, yeah, you should have, your assets should not equal your liabilities, okay? But the bottom line is that if you have liabilities out here that go out 50 and 100 years, there's nothing wrong with having a structure that matches those. So I expect what we're going to probably end up seeing is 50-year and 100-year treasuries. I believe in Europe floated one, and they floated it right at the best time. I think it was, when I say best time, it's that the rate structure was so low about 6 or 7 months ago. So we'll see where that shakes out and see if it does give competition to the 30-year. Right now, our 30-year bond, folks, is probably the premier debt structure in the whole world. So we'll see if, in fact, a 50-year starts messing with the 30-year. Because what you have there is that the Treasury will not want to do that if they think that that 30-year wouldn't get the same type of demand that it gets right now. Because when you can float something out 30 years in itself, that is a good scene. And in this case right now, we're still floating these things out at 3.1%. So 3.1% is not too bad in the aspect of. Well, actually, let me look at this, because when you actually do look at the 30 years too, the rate structure, we're not as far above other countries as we are in the 10-year. So the 30-year, we're at 3.1. France is at 1.5. The UK is at 2. Italy's at 2.8. It's still pretty bizarre that you can lend money to Italy and Spain at 2.8, 2.5, and they're not broke, but they're getting close to being broke. You stay right there, folks. We'll be right back.
The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Let's go take a look at, so you got a couple FINL. Let's see what's going on here. So this is Finish Line. This is a retailer that distributes athletic and leisure footwear. They came out with their numbers, and bottom line is that they lost money. So they lost 6 cents. They missed on revenue. So their net sales, they had an expectation of $411 million. They did $373. They had an expectation of a loss of 18 cents, and they came up with a loss of 24 cents, and their sales were flat or up. Well, no, the current year they see them flat or up to 1%. So this baby here comes down hard. Let's take a look and see what we got here. Okay, so the high out here is 31 bucks. If you want to see an equity that just keeps taking hits on the way down, folks, this is one of them. Wow, this is pretty intense, actually. So September of 2014, you're at 31 bucks. End of September, you're at 25. You go for another 3 or 4 weeks, you end up being at $22, all with volume on the way down. You go sideways again, you do a counter trend bounce, and then you do the next leg down of 19 with monster volume. And now this baby looks like it wants to, go test its high volume swing low that's laying out here. It's $16.64. That's the way that is set up right now. So this is inside, let me just look at this for a second. Yeah, so that's inside the retail business. If we go look at Foot Locker, which is in the same business, that's only down 33 cents. And that's just about at highs. So this really has to do with the company versus more than us buying at the stores. Now let's go over and take a look at some of the makers, the shoe makers. Is it AD? Oh, I see. ADS. We'll go to ADS. AG. Nope. Oh, GR. I got it. ADS. When I'm going to Adidas over in Germany. So Adidas over in Germany is trading 144. And this here. Okay, so this is off the highs. The reason I'm bringing this up, you know, I've been hearing basically since Nike came out with these numbers that Adidas is basically grabbing Nike's market share. But, you know, when you look at this chart, okay, the bottom, they have almost not the same looking chart, but Adidas has definitely been going up with light volume. Since $64 up to $160. Then it came off 160 and went to 129 with volume. So when I look at Adidas, it's the same type of chop as Nike, meaning they both want to actually get down into a lower price. So that's going to be intriguing watching that whole thing shake out. And that just very well may mean that we're buying less gear, but what very well may be happening is that they're not making the spreads that they used to make on them. If we go over to Under Armour is trading $26. And this thing is way off its highs. Well, not way off. Yeah, I guess it is way off its highs. Let's see. I thought Under Armour. So Under Armour, the high for the year is 46, the low is 23. 2005. They must have did something with this equity because I can't bring it back to 2005 right now, which is so weird. It looks like they made a new. Well, anyway, so in 2016, they were trading at 46. Yeah, we're buying less, man, because this is consolidating down at the low of 23 to 26. Yeah, let's go to Lululemon. This is trading 67. Now, this is the high-end yoga, dancing, running, general fitness. This is down 54 cents today. Oh, look at this. This is interesting. Yeah, this is back from the dead. Well, it's not necessarily back from the dead, but this is what you have. So Lululemon, if we go back to 2009, it's $2.64. Goes up to 81. Wow, man. And it's been consolidating. The consolidation, you talk about a wide consolidation. This is insane. So check this out, folks. The bottom of this consolidation is 40, let's say $40. The top of the consolidation is 82. That's crazy. But, you know, right now, this doesn't look bad. You know, it doesn't look like it wants to break out, but what it does want to do is go back to the top of that consolidation. So we're going to be evidently spending good money on, I want to see what kind of growth they have going here. Yeah, they got some good growth going. So if we look back in 2012, they did $1 billion a year. This year they're going to do $2.1 billion. Yeah, so they're doing right now. Well, the fourth quarter, you can see how we shop in the fourth quarter. So third quarter, they did 479 million. Fourth quarter, they expect to do 704 million. Big numbers. The breakdown goes like this. They do 1.5 billion in the United States. They do 416 million in Canada, and they're from Canada, and they do 135 million in Asia. Out of that, they sell. Look at this is a good number. Direct to the consumer, they sold 401 million in product. Not bad. Corporate-owned stores did 1.5 billion. And franchisees did 142 million. And when you look at the 3-year growth cycle, the growth cycle is all selling direct to consumer. See, that's a sweet model. When you get a model going that you can sell direct to consumer, and you have some stores that people can look at it, that's a good scene. You know, direct to consumer, 26% to growth in 3 years. Corporate-owned stores, 11% growth. Franchisee stores, 19.8% growth. That's not a bad setup. Market-wise out here, we're still in a light volume holiday mood. We're at 463 million on the NYSE. You take a look at the NASDAQ Composite, we're at 1.2 billion. You're going to get light volume right across all these indices. As you come over to TFNN, don't forget, folks, right on the front page, you're going to see we have our annual Tiger Dollar sale, and we donate 10% of the cash value in your name to the Salvation Army. You stay right there. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, as you come over to our website at TFNN, we were just talking about the Salvation Army Tiger Dollar sale. Now, this sale ends tomorrow. The way this works is that we do this every year so that we can give all our customers a bonus, number one. We can give, well, actually, you are giving directly to the Salvation Army because this donation goes in your name. Tiger Dollars, folks, are good for all product at TFNN. No expiration date, and are totally transferable. The way this Tiger Dollar sale works is this. You can, if you purchase $600, the cash value you purchase is $600, you get an additional, you get 25% bonus. So you get 750 Tiger Dollars to spend. What we also do is that we send a check to the Salvation Army for $60 in your name. Well, we send it with your name. Salvation Army sends you personally right to your house the tax certificate so you can take that $60 off. If you buy $1,200, you get an additional $300 to spend. You get $1,500, your 25% bonus. You'll donate 120 of that. We will donate 120 of that to the Salvation Army. They send the certificate right to you. $1,800 is the most that you can buy. You get an additional $450 to spend for a total of $2,250. We give the Salvation Army $180 in your name. They send it to you. So check it out in the front page of TFNN. As I said, they're good for any products that you have at TFNN right now that you may get in the future. And this does end tomorrow. And that's a hard close on tomorrow, because what does end up happening, folks, is that we are not going to be opened this Friday, which is really, this is the first time we've ever actually done this. That on Thanksgiving, the Thursday, the Friday after Thanksgiving, we don't open. But what has happened this year, it's pretty amazing, is that the markets themselves are closed on Monday, but we got a few different emails from many high players inside the marketplace. Now, the broker-dealer community is going to be open, but guess what? There's not going to be a lot of people on these trading desks, because they're giving everyone off. So the bottom line is that we are going to give everyone off, too. This is the first time that actually, since we've been doing this, that, going back 20 years, that you actually get 4 days off in a row, which is pretty amazing. But guess what? It's a dull market. It's a sideways market, and that's how it goes. So my point is that this ends tomorrow. We will be giving the Salvation Army the check this coming Tuesday with your name, so that you will get that tax deduction for 2016. Market-wise out here, bottom line, what I do expect we are going to see is this. Somehow, this good old Dow Industrials, during this holiday period, folks, they'll try to spike this to the 20,000 level. There'll be someone in the futures pit that's got to say, listen, man, we got to get this thing over with, okay? And the way that the spike, I suspect, will come in is that you're in the Dow futures pit. They'll throw 50 contracts at it at one point, and you can get that point, that 20,000 spike going. What I expect we're also going to see, though, it'll hit the point, and then that's it. So it's going to be intriguing next week coming into here, because what you do have is that the last trading day. Let me just look at this calendar for a second. We're getting there right now. Really, that's the reality. So you got the last trading day, of course, is going to be on the 30th, but Tuesday, you got the 27th, 28th, 29th. Hey, see where it shakes out. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock in the morning. Wow! Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.